Welcome to the Broken Pie Chart Podcast, episode 386. I'm your host, Derek Moore. With me once again, Mike Snyder and Shane Skinner. All right, so Kevin Warsh said some stuff. I think he said he wanted to use the balance sheet if appropriate. Nothing there. This week we had inflation, both CPI and PPI, came in less than expected. People seem to get excited about that. The Strait of Hormuz is kicking off again. We've gone from, I'll get to the ship count later. But to me, this is really just all the stuff that went parabolic and has been going up and up and up. So the memory stocks, the chip stocks, I don't know. I'm going to have to check the Korean ETF because that had Hynix, Samsung, and the memory stuff in there. I mean, to me, by the way, the winner in all this, I think the value index got rid of Micron, the S&P 1000, the Russell 1000 value. I think they did a reconstitution and got rid of them at the top. So good for the Russell 1000 value index. I'll have to double check that. This is one of those classic things where people kept piling into these stocks. They kept moving higher. We're off about 30% from the highs in Micron, just checking. But it's a case of like, if you're holding these, you have to decide, am I going to hold? I'm not saying it for an investment, but as a trader, do I hold or do I try and get out before everyone else decides they got to get out and I'm giving it back all my gains? Nothing fundamentally has changed really about Micron. Nothing fundamentally has changed about some of the memory stocks or the chip stocks. If anything, you would say the forward multiple on forward earnings has gone lower. Like there was nothing bad about the earnings reports of these companies. So, Mike, if I look at Micron and I cover up the name, this looks like any other stock. Like this looks like Oracle. We'll see how if it keeps going down, if it stabilizes here. But we could have been talking about Oracle from, what was that, a year ago? Was that 7 months ago?
Yeah, no, absolutely. And if you look at Micron, I mean, yeah, it's off 30% from its highs. The stock still since, end of March is, I don't know, up 3 times. So it's still up significantly. And I think, that may play a part in some traders' minds, depending on when you got in, is I'm still up a ton on this. Maybe I take this profit. Even the semiconductor index year to date, which I think was down like 10% this week, it's still up 76% year to date. So,
is that bad or is that good? Do we want it up? I mean, yeah, that's pretty good, right?
Yeah, it's not bad. So these stocks have run a tremendous amount. I think some profit taking when something's up that much is normal. It's bound to happen, whether or not the fundamentals have changed. And so if you're a short-term trader, that's something you got to think about. Is this thing's going higher? Is at what point do you close out the position?
Don't you think though, Mike, like the fear of losing is more than the fear of not winning? And I don't know if it was profit taking. That's a good general term. But to me, it's like, this is about self-preservation for someone holding these. They're like, oh, do I really give it all up? Like, I don't want to be the last one out of the room when there's no one left, right?
I think so. I mean, personally, I think that's probably how you should think about it. You shouldn't hold on because you're worried about missing out on upside if you can't handle the downside, right? So this thing has run up, and something that moves that fast, whether it's the semiconductor ETF or Micron itself, it has the ability to sell off just as quickly, if not faster.
Shane, you sent me a chart, but I'm going to call it chart crime here. That's only through 2020, as far as I can see.
I tried to delete it. I tried to get a more up-to-date one. I just don't have anything close enough up-to-date that I like. But
yeah, but let's go with the point in general. The chart is a crime, and you'll owe a nickel to the kangaroo court jar. But I think your point that you were going to, if the audience didn't see the chart, you're just kind of making the point that there are these areas that are the overcrowded trade. Like trades get crowded, they get overcrowded, they get momentum behind them, it's fund flows. And then at some point, people pick up their toys and they go somewhere else. And I think the point you were trying to show is like, all right, it was Mag 7 for a while. Nope, now it's the chips and the memory. And then maybe chips and memory are still good. Maybe it rotates to something else. Like this just happens. I also think it's interesting that Apple had a really good week. I mean, there are companies, big companies that are working in this market. It's really been a subset of the market that's kind of having problems, Shane.
Absolutely. I mean, I think every day that we were down, especially, today, I think we woke up and we're like, oh, market's down quite a bit. What's Apple doing? Sure enough, it was green, when we checked. And so I pulled back there on the day. I think it ended up closing, no, it closed positive, up 48 cents. So Apple's at 333, 74 on the close there. We were what felt like just at 275 like a month ago. And I've always been a huge arguer of the idea that Apple almost behaves like a defensive stock within the tech sector. Whether that's actually true, I don't have the data to back it up, but it just feels like when no one else knows what to go into, but there's still a little bit of risk appetite, people aren't taking their money completely out of equities. Apple is sometimes where it seems to go. I'd also think you can make the argument that of all the hyperscalers, of all your Mag 7 names, stocks names, tech names in general, probably the least exposed to the, cash flow spend-a-thon that we've seen over the past 2-3 years across the hyperscaler space. And they might still have a little bit of cash on hand relative to other players at this area.
Well, I mean, what probably, with Apple is they've become less dependent on hardware, and they've created this services ecosphere, where they're basically collecting, it's kind of like a toll, like the Strait of Hormuz or whatever the heck they're doing over there. But like if you buy anything in the App Store, Apple gets a cut. I think Google, I mean, I don't know the number, but I know Google, I think that was upheld where they can be the default browser and they can pay Apple money. But I just think about it, like I'm looking at my iPhone right now. I pay for cloud storage because, all the pictures, videos, whatever, apps, everything I have on my phone, it's all stored there. I've got some sort of I guess Apple Music that comes with, if you spend as much on storage, like I'm paying a recurring bill to Apple. And then for the devices, like I pay, it's small, but it's the, not the insurance, but it's the maintenance plan.
Yep.
So if something happens to my watch or my phone, I go to the store, I hand them the phone, and then they just do it. Like it's a good point. Like it's almost like, is it less tech and is it more, consumer staple?
Yeah. Yeah, I think that you can make that argument. And I think that you could also say that maybe the market's starting to have an appetite for really wanting to see investments in AI paying out or justifications there. I know we've talked about like OpenAI, right? And Anthropic are likely coming public either this year, possibly kicking it to next year. A lot of players in this space that have invested into the AI sector probably want to see companies like that come public and, a little bit more progress and some of the software and AI being used to replace people.
Yeah, I mean, like Mike, I don't know if we've talked about this yet. Wall Street Journal article pointed out that Apple is suing OpenAI for trade secrets. They're kind of alleging in the article that they would do interviews of Apple employees to sort of gain intelligence. And by the way, I think a lot of companies do that. They sort of interview, and in an interview, like, what's the person going to do is getting a job? Oh, tell me about a time when you did this or this. I'm not saying at the level they were hiring, those were the tell me a time interviews. Apple, I think their biggest fear is that somebody else, and I think this ties into the OpenAI suit, somebody else develops a device that then becomes the pipes for all of this. And that's what they want to avoid. I think Apple is very content not having spent all the CapEx, they'll figure out, Google's the browser, the default browser. I'm sure one of these companies eventually, I think Google's going to do their AI. So that will be provided by Google. And quite frankly, I think Google does it much like Google's search or Google's version of Siri is awesome. Siri is garbage. It's absolute garbage. Like I asked it something the other day and it sent me to a link to a restaurant or something. I don't even know what it was. But yeah, like Mike, if you look at this, I think that's behind the suit. I think they're defending the ability to collect tolls.
Yeah, absolutely. Apple has always been about keeping you in the ecosystem and making it as simple as possible to be in it and difficult to leave it. Right? If you leave it, you have 3 or 4 different services you're juggling at once that don't all connect the way Apple's does. So I think that is probably a big reason behind that. And when you think about Apple and their non-spending, I guess I'll put it for AI, they seem to be a little bit more open to using third-party, tools now than they were in the past. In the past, everything had to be made by Apple, built by Apple in the Apple phone. And it seems that now they're a little bit more open to, well, we can adopt this later and use someone else's.
It's almost the inverse, Mike, of Microsoft, where for a lot of years you could use Excel and, you could buy those programs. They would work on they wouldn't work on Apple's computers. It would work on a PC. And, sure, if you had a Microsoft phone, you could access some of their stuff. And then at one point they said, let's just make this a subscription. Anybody on any device, any computer can access Microsoft 365. It's sort of the inverse of what Apple's doing now, where they want to, Microsoft's like, why wouldn't we take revenue from anybody? This stuff is the best. So, but Shane, Microsoft, let's take a look at what Microsoft is doing. I felt like it was starting to get a bid, and which you look at these companies and it's like, yeah, Microsoft's chart looks a lot different than Apple's chart. Microsoft isn't selling off necessarily on the legal news with OpenAI, but there is, they have some sort of stake in OpenAI, and you kind of wonder, I don't know what Microsoft's thinking.
I look at Microsoft, look at Cisco, look at Meta, although I think Meta recently has caught a little bit of a bounce, but it's starting to turn back over again on a potential top there at its 650, 700 range that just can't seem to really break through and hold. And where I'm going with this is, again, I keep hounding it, but I think the companies that have really blown a lot of their free cash flow, not that they're not capable of getting it back up, but I think they're starting to reflect the fact that, they're not nearly as liquid as they used to be.
I don't think that's it, though. I don't think anybody cares that they're not liquid, because a lot of people were critical.
They can finance stuff, right?
No, but a lot of people are critical of Apple having too much cash in the balance sheet. I think what people are worried about is they used to buy back a ton of stock, and so there's sort of an argument. You reduce the float of your shares, all else equal. You have 2 million shares, and you reduce the float to 1 million. The same net income divided by the 2 million shares, and a price to earnings, like your EPS per share goes up. Is all I'm trying to say. Shane, I don't think they're necessarily worried about the cash flow. I guess I'm thinking, are they worried that the buybacks go away? Because that's been a pretty big driver. The companies, I believe, are still doing stock-based compensation. But you're seeing dispersion. You're right. Like Microsoft does not look like Apple. Look at Apple, look at Microsoft. It's like, oh, is this thing inverted?
And that pairs trade was, those things were so highly correlated. I don't know off the top of my head how correlated, but I'm sure if you ran an analysis over the past 5 years, the dispersion probably picked up significantly over the past probably 6 to 12 months. And again, it seems like if you look at the SOX versus the Mag 7, a lot of the up movement we've seen in stocks has not been accompanied by Mag 7 up movement. And to me, I just wonder if it's been a transfer of, balance sheet, if you will, going from the people paying for all this stuff from the chip companies to the hyperscalers. And we might see it come back. But, it's interesting to say the least. Market's sort of in a bit of a fork in the road here, I think, across the board.
Isn't it always though? I'm being the contrarian on the call today. I'm going to be devil's advocate. And like Mike, I know a lot of people were critical of companies like Apple, spend your cash. Like, why are you doing stock buybacks? There's no value to that. We're going to tax buybacks. There is a tax on buybacks. So, like Mike, in some ways, like the companies are doing what a lot of people were critical of them of not doing, like spending. So that money going and actually spending money on stuff flows down to the employees, flows down to other companies' employees. Like, isn't this what people wanted?
Yeah, for years it was Apple doesn't know how to. They're not coming up with anything to spend their cash on, and that was a concern, right? It was if they're not being innovative enough to spend their cash, then what's really the direction of this company? And now they have this cash, and they're being applauded for it. Versus some of these other companies, where I think the question now is what's the potential return on these investments? And you mentioned buybacks, and it seems like, at least in the short term, that the thought is that buybacks would generate a higher return than where the cash is being spent at the moment.
Let's talk about SpaceX. And it is now, Shane, what did it close at today? It was like 125. I didn't grab the final price, but it's below the IPO price.
$23.99.
123.99. Okay. So for anyone who missed out on the IPO, you can now buy it for cheaper than you would have gotten the IPO for. If you got IPO shares at 135, and look, who knows what's going to happen tomorrow, much less in a couple years. I mean,
are you buying this to trade it though, Derek, if you're buying it right now? Or are you buying this because you're a long-term investor, right?
Yeah, I mean, Shane, this brings up an interesting point. And I remember when you go back 10, 15 years, I don't have it in front of me, but I did this study and I said, let me look at some of the big stocks like Amazon and Google and Meta and I don't know, there's a bunch of NVIDIA. I looked at a bunch of these companies. And the question is, could they ever grow into their valuation? Like, you look at something trading at 500 times forward earnings, or maybe they have negative earnings. And then you look at the net income 10 years later or 15 years later, and it turns out you could have bought the company for like 0.5 times forward 10 years earnings, and they grew into their valuation. That's the question you sort of asked with SpaceX. If you buy it here, is it going to grow into the valuation? And I don't know. I mean, seems like the revenue estimate is about $35 billion. I think their estimates now have them making money. I think it's a 700 times forward PE, although that's probably come down since I looked at it. Anthropic's coming out. I mean, maybe people are kind of like, well, Anthropic is rumored to have $100 billion in revenue. So if SpaceX was $2 trillion, what's Anthropic? I don't know. Like, if you're buying it here, Shane, are you buying it because it's pretty cool technology and you want to be involved? You buying it because why? You think the earnings and growth is going to be better than expected? Like, so what? If you wanted to make the case, and on whatever side you take, like, are you buying it, selling it, holding it, or doing nothing? I'll take another position just to have a little fun here. What are you doing?
I do nothing now, but if I were to buy it, it would be because I'm expecting some type of announcement in the coming months to coming year or two with this existing administration and probably future administrations, regardless of who's in charge, to continue to grow and expand contracts and work with SpaceX. And then I think that you mentioned a couple weeks ago this idea of like
Consumer
SpaceX.
cellular. Yeah.
Yes. And so like you start to think about that. And then I know this is going to sound, I don't want to get too off the rails. I won't go there. I'll bring that up.
I'm gonna give you a short leash here. Let's see where you go with this.
So I just, with his owning of SpaceX and Tesla and everything else, I could see him putting a bid for a materials company out there, something like a steel manufacturer or something extremely relevant to the manufacturing process involved in these companies, because there are a lot of similarities, I'm sure. Things, materials, and resources that both Tesla and SpaceX use. There's a lot of probably synergy, you could argue, when it comes to AI, the moat, and the satellites, and how this all weaves together. And so maybe at another point too, I make you the argument, what if SpaceX and Tesla merge eventually?
Yeah, that is a question for, if you look at Tesla stock, you look at the chart, it's not an all-time high. And it's not a great chart. It's kind of sloppy. I'm just looking at the daily chart. Mike, if I'm looking at this and if I'm only looking at the chart, like, do they believe that they're going to merge with SpaceX, or are they not happy because they'll get shares of SpaceX in lieu of, whatever the market cap is of Tesla, they'll just get shares of SpaceX.
You're saying so maybe they would prefer to be separate from SpaceX at the moment?
I don't know. I guess it depends on your view. Like,
yeah, I mean, with SpaceX, it's, when you think about growing into the number, it's a big number, right? So you really have to believe in the addressable market, and the addressable market is gigantic. So it's obviously on the table for them to grow into the number, but it is a big number. And so I think that does scare a lot of people off. How long is it going to take? Is it actually possible?
I'm going to give you, let me see if I can find it. Okay. So Amazon in 2006, I should have done this before, but I'll do it quick. Their net income in 2006 was $359 million. Full year ending Feb 6, 2026, $77.6 billion. So I want you to think about this. It was trading at a trailing PE of 45 times. Now it's not 700, but 45.52 times in February of 2006. The share price, and this is split adjusted, $1.96 on 359 million. So if you bought it then at 45 times trailing, and it had 8.3 billion shares outstanding. Today it has 10.7. I mean, if you took 77 billion and divided it by 8.3 billion shares, what is that? Like 9 times trailing? You get what I'm doing, right? I'm taking the last full year net income and using the share count in 2006 when the trailing was 45. Right. Well, then you bought it at a 9 trailing forward, 10 years. So that's what I mean. Like, and, you look at full year 2014, 600 trailing PE. They had 274 million in revenue, 9.1 million shares. I mean, if you bought it at $17.93, it's now $2.10. That's the point of that, Mike, like of me pulling these up. Like, you just don't know. You're buying it. I mean, you're buying it at his negative earnings.
Yeah. At the time you're doing it, it
seems crazy.
It feels crazy, but
yeah,
that's how it turns out 20 years later sometimes. And sometimes it doesn't, but
sometimes it doesn't.
Amazon's a great example.
Yeah. NVIDIA would be ridiculous. Like, you probably could have bought it at, 0.5 times forward net income of today. So yeah, I mean, here's the thing so I told you I would take the other side. If somebody's interested in this stuff, like, why not, if you're designating a piece of the portfolio, let's say well, you'll kind of explore some stuff. It could be a pun intended, could be no pun intended there, space exploration. But if you have some money and you're like, I'm just going to throw a little bit in a small position, like sprinkle a little bit in there now and kind of staircase in, sprinkle a little bit in, in a month or two, in a quarter, just do a little bit dash here and there and pick up some shares. To me, it's an interesting company. And do I need to have a position in it to be very interested in the earnings? No, because I'm interested in this stuff. Shane, I know you watch this stuff. You're the guy downloading research reports on the weekend, but
obsessive.
Yeah, I mean,
it's funny though. It's like you're talking about like long-term investing, scaling in, right? Dollar cost averaging, doing it on a structured manner where over time you'll have amassed the position. You'll probably have who knows on the average price, but if you're doing it on a structured manner, like in theory, you'll have all those shares for a price that's not at the top of wherever it's trading, it's about the time horizon. If you're a trader, you've probably loved the volatility on this thing. If you've been on the right side of it, at least. If you've been shorting vol or, long since the top, you're probably not loving this, but that's the world of trading. That's completely different from long-term, investing. But there's a lot of potential for this to grow in. And I never thought Tesla would grow into what it's grown into. I was a hater all the way up. I never touched it. And I was probably dumb for that. But, not every name or every area of the market's for everyone either. And that's why, it's the best part about getting to invest. There's a lot of things you can invest in.
There's an interesting options trade here. So where if you sell what's called a cash secured put, and it's not a recommendation here, just kind of a little tactic. So one of the things a cash secured put does, it says, well, I could buy the shares now. I have the cash in my account to buy 100 shares of stock, let's say. And I could buy the stock and then I would have all the upside and I would have all the downside. Easy enough. Well, there's this tactic where you sell a cash secured put and you sell a put at a strike price below the current market. So maybe you said, okay, and we know people who have done this where if it gets back to 135, the IPO price, and it was higher at the time, I'll buy shares in that. And for that, you're getting paid a premium. So you're sort of getting paid to accept the stock at a lower level. The downside is the stock can still go to zero, and your loss is basically the strike price minus any premium you got to zero. The other downside is opportunity cost. You could have bought 100 shares. If it goes to $1,000 tomorrow, you participate in that. If it goes to $1,000 tomorrow in the short put, the cash secured put, and assuming it doesn't come back down before expiration, you get to keep the premium, but you didn't necessarily participate in the upside. But for someone who, works with an advisor who does options or understands this, like Mike, that's an interesting, because the volatility is so high. You're not necessarily getting paid to place a limit order, but it's adjacent to that,
Yeah, it's sort of similar. I mean, the stock could drop below your strike price and come back
go to
up,
zero,
and you never actually take ownership of the stock. So that's sort of how one way it differs from a limit order. But yeah, with volatility as high as it is in SpaceX, you get paid more than the average stock to sell a put at a certain distance away from the stock price, and you're getting paid that much for a reason. It's because there's a much higher probability the stock's going to actually reach that strike price because of the volatility. So if it's a stock you want to own and you're comfortable owning it at a lower price, it's not a bad way to enter into it. And like you said, you also have to be aware of the opportunity cost, right? You don't actually own SpaceX. So if SpaceX goes up 10% next week, you might only make 1%, which isn't bad over a 1 week period, but you don't get all the upside. So there's pros and cons as there always is.
Yeah, I mean, I look at this and I don't know. I mean, like selling covered calls is interesting too. We know some people doing that, and that's just you buy the stock and you sell a call above the market, and you say, okay, if it gets there, I'm fine getting out, but I get to keep all this premium. There's something for everyone in the markets.
How about a risk reversal? You want to sell the put and buy the call. Use the put to finance the upside potentially.
Well, that's a synthetic long. Yeah,
Yep.
that's a synthetic because you have all the downside. It's all when you look at a synthetic position. It's what are you replicating? What ownership are you replicating? And selling a put, buying a call is similar to the risk characteristics of you have the risk all the way to zero, and you have the uncapped upside though. So, I mean, you'll pay for that because the way that financing works, and so, all right. I mean, I'm interested in when are their earnings. I'm looking forward to that. Like Elon's going to have like the Tesla call, and then he's going to have the SpaceX call. Does he own any other public companies right now? I don't think so, right?
I don't think so. I don't see a date yet. I might not be looking far enough out. I don't think there's been a SpaceX release its next earnings. I see August 6th according to Google AI. We'll see.
All right. Keep an eye on that.
Nice.
By the way, I looked up NVIDIA, 2005, their net income was $100 million. Split adjusted, the stock was trading at 21 cents a share, and your trailing PE was 42.67. Now, it's not 400, it's not 1,000, but if you bought it, that's what, 21 years?
Jeez.
So you could have bought it at 21.8 times forward 2026 earnings. So 100 million, and last full year they made looks like 120 billion in net income, not revenue, net income. So there you go. All right, let's talk about Warsh a little bit. Shane, you mentioned that you felt like the market was a little bit too harsh to what he was saying. We have the good inflation data, and you feel like I don't think the market was really paying attention to him this week. I think this was about the geopolitical stuff, and I think it was just, I don't want to be the last person out of the room on some of these high tech names. But you thought it was significant enough that you messaged us like, why is the market looking at his comments negatively?
I don't think that hearing him say that, I'm not terribly hawkish. Now, hawkish and bullish and bearish hawkish and dovish and bullish and bearish aren't necessarily one for one the same things, right?
No.
What I think is the market, I think, is almost kind of like starting to get a little confused. Like it doesn't know how to read Warsh. It doesn't really know what's coming. It doesn't know what to expect. It doesn't know how things are playing out with the situation in the Middle East. And so I think that the rotation and the pullback here we've seen, I think it's been less about Warsh, and I think just more about the market. I don't know. It's been hot. You're seeing profit taking, summer doldrums. We mentioned that recently. It wouldn't surprise me to see more selling into FOMC at the end of this month. And then maybe the market ends up liking what it hears. And, the second half of Q3, August, September, we see some relief. But I don't understand why people would think hawkish when he specifically said that he's open to using balance sheet expansion in times of emergencies.
I think the Fed's going to do what the Fed's going to do. I mean, they've proven, and they opened Pandora's box, I guess that's what you call it, in 2020, when they went out and they actually bought ETF shares.
Yep.
They actually didn't buy as much as they authorized they would buy, but just them saying we're going to buy it and buying a tiny bit. Now, I mean, my opinion. I think the next move is down, not up. So I think that's okay. Look at the Strait of Hormuz. Mike, were you on one of the two vessels that crossed the Strait of Hormuz on, it looks like today?
I'm coming live from there now.
Okay, excellent. The analysts went there. We talked about that. That one guy went there with like a. Yeah, I mean, look, two ships. Which direction were they going? They were west to east, and they were dry cargo ship. So I'm not sure which of those you were on today, Mike.
Can't say, but yeah, the market cares about oil again, right? I think
it does. It cares about the ship
every
count.
week we have something different to say about it. The market doesn't care right now, and it'll matter again when it matters. And this week it matters. I think that is a big part of the market movement we saw this week, and also earnings next week, and Intel specifically. I think Intel's been one of those names that's at the forefront of having these big moves higher, and I think there might be a little bit of nerves as far as what Intel's going to say and how that stock's going to react, and the trickle effect into other semis.
Yeah, Intel, it's interesting. Like Taiwan Semi came out, was it yesterday? I think it was a good earnings report. They sold off. Maybe now it's just these companies going to sell off on earnings. So you picked Intel. The other ones so Google and Tesla after the market on Wednesday, the 22nd. I'm just looking up and down the board here for anything else. Some of the airlines, if you're so inclined to be interested in those. I mean, Blackstone, they may say something interesting about commercial real estate, or I think they have a lot of private placements that deal with AI infrastructure, my understanding. So, Shane, you look at Google and Tesla, like which of these are you more excited to see? Or maybe it's Intel. Mike's watching Intel.
I'm gonna leave Intel for Mike. I think Google, more than anything, I'm more interested in just because they've been a little bit more prominent in the AI chip space. I'm actually interested to hear if there's any more developments in their shrinking need for memory without lowering compute or output within some of the stuff they're developing. The reason why is because the more they improve on less memory needed to do more compute, the bigger of a hit I think that might also impact the other memory names in the space, right? If they find significant improve there. But I'm gonna, not to like get out of this one, but you saw IBM this week, right?
Mm-hmm.
I mean, you talk about, I don't know if we should have a moment of silence. The stock's still alive, but 52-week low this week, and I think this was its worst week since 1968, if what I saw was correct, 69. So not a good week to be IBM.
Well, so it was 290. Now I think the low was 204. I think it closed around 212, 213 today. I mean, I got news for you though. Single stocks. So
yep.
The all-time high was 332.46. That's not where it came down from, overnight this week. But, you go from 290 to a low of 204. I mean, that's minus 29%. And that may seem like a lot. And you're right. I think on a historical basis, that's kind of a big deal for IBM. Single stocks do this all the time. That's one of the reasons why we work with advisors and their clients and our clients to kind of say, hey, if you've got a large concentrated position in a single stock, you have more risk than the market. You are not diversified. You've got single stock risk. Something happens to the CEO shows up being let off in cuffs and has stolen all the money, or they just have a bad announcement or just something specific to their business. So, yeah, I mean, this doesn't surprise me that this happened, but
pre-announced earnings that they missed. They were supposed to report earnings on the 22nd, and that's probably cost for more vol than one would have expected if they had just...
So you think if they just did the earnings announcement and said, here's our earnings, it was the pre-announcement, people weren't ready for it?
I think that caught people off guard. Now I'm sure that it was a miss, I think. And so if it's a miss, it's not going to be good either way when that's announced, more than likely. Sometimes stocks rally on misses. Who knows, right? But yeah, I think the market just really wasn't expecting a early announcement on a miss from them. And I don't think this move's necessarily, it's explainable by that, right?
Yeah, I mean, I don't know. I mean, this goes back to the whole resettling of just some of the stuff we're looking at right now. The software, the AI, like who's doing what. Yeah, I mean, I do wonder if they just would have announced. Maybe they had a reason for. Maybe it was coming out anyway, or they're. Sometimes companies are supposed to make pre-announcements if it's material, and so there. You missed one of the important ones on there. Nobody talked about AMC. They're reporting earnings Monday. No one's talking about AMC. Give you a little perspective here on AMC. I'm kidding. I really am. I don't even know what their earnings are going to be. I pulled up a chart on them. Do you know at one point in 2021, their high was $351.31. They closed today, was $1.94, down 13 cents.
I've got the split adjusted high at 72.62. I don't know if that was split adjusted or not. Maybe
no. I mean, I'm looking at a Bloomberg chart for AMC, so it's $1.94. The chart has a high of 351. So I trust Bloomberg. I think they probably have updated the chart.
I used to take calls on those guys when I started on the brokerage desk on the retail trading side. My first year of calls was GameStop and AMC. And I learned a lot in a very short amount of time about vol and about margin calls and margin requirements and can be adjusted. I mean, doesn't that feel like forever ago? It was what, 5-6 years ago?
Yeah, I mean, they did I think there was a movie about that time. I remember too, Mike, you were probably very active in the Wall Street Bets. You were probably posting multiple times a day, I'm sure, arguing that AMC is going to sell their movie popcorn on a subscription basis, and the total addressable market was like $100 billion. You're probably one of those people, right? Like, but do you remember the vitriol of anybody who questioned like why AMC was this high?
Yeah, you weren't supposed to.
I mean,
and maybe with the Odyssey coming out, maybe there's life here.
Okay. I'm supposed to go see it tomorrow with my son, so I'm pre-announcing that.
Going to the bottom line. Yeah.
Nice.
Yeah, I'm going to a Harkins theater though, not AMC. So it's not, because AMC doesn't have an IMAX, the 70 millimeter. All right, we'll get to that in recommendations. No, it's like Mike, who is still holding this? Are there people who bought at 350 or like, I just don't think people understand the story here. I'm sticking to it.
I don't think so.
You think they're done?
Yeah, I mean, or you're holding it in hopes that there's another meme trade that happens and you get in before, it becomes popular. Right? I would find it hard to believe anyone's holding it because they really believe in the long-term story. Right? Just like in 2021, when people were buying it, no one was buying it because they were looking at the margins on, a movie ticket.
So I'll just give you the trailing 12 months, a current last 12 months. This was as of 3/31/26. Last time they reported earnings. Can't wait for Monday. Is it pre or post market? I might have to take the day off no, I'm not going to do that. So is this in millions? Yeah, it's in millions. So 5.031 billion was the revenue. Their net income was minus 340 million. And their EPS adjusted was minus 66 cents a share. Free cash flow is minus $123 million. So I'm just looking back. So they had a net income loss in 22. Why not? I'll go minus 838 million in 22, minus 317.5 million in 23, minus 468 million in 24, minus 439 million.
When does Amazon buy him? Like, when do they buy him? I know that rumor's been floated out there for years.
That was always, I said that on one of our prediction podcast.
Yeah, like when are they going to, and I wonder if it's one of those situations where maybe they re-examined it and they either don't think the money's there, or they might think that they let them sit a little bit longer if they think it's going to get worse, and maybe they get a better deal waiting a little bit longer. But to me, if Amazon showed interest, I would think they might pop back up again at some point. I don't know.
I mean, is Amazon just, to me, the play there is you make it part of the Amazon Prime offering.
Oh, that would be brilliant.
Because they have the technology where you can walk in the store and just pick stuff out and walk out, and it automatically rings you up. Like maybe if you have the Amazon app, you just walk in, it rings you up for, well, I guess it doesn't know what movie it is.
You can buy your tickets ahead of time on the app. I mean, this solves it all.
You could. Well, the play here is, though, they would get all the revenue. So they own MGM. So they could have that whole catalog and whatever new movies, and or maybe they just wait till, at some point, if it keeps losing money, I'm trying to look at their balance. I'm trying to do what I shouldn't be doing on a live podcast and sitting here looking at AMC's balance sheet. So I'm going to move on. I've spent enough time on this. But here's an interesting question too. Shane, you think about, was it Roaring Kitty? And everyone said he was right. He was right. GameStop, absolutely. Like, he was right about GameStop. It went up. Was he really? Was he really right about GameStop? I mean,
I think that it's a zero. I think markets are in a sense zero-sum game depending on how you approach them. And I think for a lot of the people that were approaching the GameStop thing, trying to make money, it was from a zero-sum game approach. I don't think people realize that, yes, there was an excessive amount of shorting going on in GameStop, greater than the number of shares that existed technically. I believe that was confirmed. And so he kind of found an anomaly, and I'll give it to him. Like, he wasn't wrong in his observation. I think about this stock has been shorted greater than the amount of shares that exist. Therefore, if enough force is applied to buy it on the opposite side, it could force the squeeze. It's like physics in a way is what he was sort of playing out. But there was no, I think, future or world where this was ever going to like hold or go even higher, or GameStop all of a sudden become this massive tech company. It's just, I mean, I know they're going for eBay now. We'll see how that goes. But I think that if viewed from the lens of how we view it, it made sense. But to the average everyday person that never had a brokerage account prior to, no, I don't think it was what was being sold to them. And there are still lots of people that hold on to the belief that they have
earnings. This is the first time I'm looking at the fundamentals on this company. They're trading at 17 times next forward. Looks like they have positive earnings. And, the thing that they did is they got to retire a lot of debt, and they got to issue shares at ridiculous price levels.
Brilliant on the CFO's part.
Yeah. Well, I mean, AMC, I think AMC did that as well. All right. Yep. Let's go to recommendations. Shane, I'm going to start with you.
So if you haven't been watching, there's been this really big thing going on all around the world called the World Cup. And there's a finals match coming up between, I believe, Argentina and Spain. Very exciting game. I'm going to say Argentina is going to win. We'll see what happens.
Yeah, and this probably comes out after the game's done because it's an early start East Coast time because they want to, in Europe, Naturally. They want to have it not be at, 4 a.m, 2 a.m. So
that was my mic pass. Mike, you can't recommend it now. So I saved you from that.
Yeah, I like Argentina too in this one. Mike, what do you have a pick?
Argentina, team of destiny, it seems like.
Yeah, so probably Spain is the pick then.
Right.
If all three of us can't be right there.
Argentina, this is, something's wrong here.
Yeah. Mike, what do you have this week?
Project Hail Mary. I think, I went into it with pretty low expectations, which is maybe why I liked it so much, but strong buy for me. With Ryan Gosling about, going to another planet to try to save the world. And I thought it was really good.
This is great. Mike was out when you gave it a sell, Derek.
Oh, really?
This is great. I'm so happy that I just got to be here for this. Oh.
Yeah.
Sure. You didn't like it?
I was a seller or hold. I felt like instead of having all the flashbacks, they just should have had all that stuff.
Give you the story all up front.
Yeah, it didn't make sense to me. I thought it was slow at times. The Rock and sure, he figured out a computer program to talk to essentially a rock. The ending was pretty innovative, I thought, but
so yeah. I didn't like that part, how he was so easily able to communicate with the Rock, but then I thought, this guy is thousands of light years away. If he can do that, he probably can figure out this program too.
Yeah, he probably could. And he probably could figure out how to get home too without. Right. Yeah, I don't know. Like, it was a sell, maybe a hold for me. It's a strong buy from you. This is what makes a market though.
That's
buyers
right.
and sellers. So, all right. For me, I'm giving a pre-announcement, pre-recommendation. That's the Odyssey. So we're going to see it in 70 millimeter IMAX tomorrow, my son and I. It's a 3-hour movie, I believe, Christopher Nolan. I like Christopher Nolan stuff, so I'll report back on whether the hype is justified. We bought the tickets like a month ago. So this is kind of opening weekend. Are you guys going to see this? Or is this, you guys both have kids, young kids. You can't
definitely want to see it, but probably going to have to wait.
Yeah, I want to see this. This is up there with Beowulf for me. So
yeah.
I also want to see Young Washington. I've heard mixed reviews. I've heard buys from people. I've heard sells from people. But coming from like history, I like 1900s history. I really like 1700s, 1800s. And I think from what I've heard from some people, they did a really good job of telling some of his story from his youth.
The Christopher Nolan one that I'm a little bit in the middle on is Tenet. I feel like I needed to bring a notebook to that one the first time I saw it. It was good. It was just, I'm still trying to figure out what happened in that movie. You guys seen that?
I have not.
Yeah. I've watched it twice and in pieces. And of all movies you could watch in pieces, that's like probably the worst movie I think you could ever watch in pieces. So I need to rewatch it. You might as well be watching clips of like the bowling championship on ESPN or something, right, if you're watching that in pieces. So, all right, look, we'll see. I mean, the Odyssey, it's not a long book. A lot of people think this is massive book. I don't think the Odyssey is that long. It's no,
right?
I'm hoping for landscapes. I'm hoping for a lot of tension. I'm expecting it to be quiet. I'm sure there's going to be a lot of silence. That'll be interesting.
I mean, Christopher Nolan, you and I are on different sides of Project Hail Mary, but what's the Christopher Nolan with Matthew McConaughey? Interstellar. Like, Interstellar is really good.
Yeah. Yep.
3 hours went by like it was nothing in the theater. So, all right, I'll report back. I'm just looking at the board here. Anything else? Nope. And, the only other thing I'll mention is it did seem, Shane, you brought it up on our trader chat, that market kind of sold off. The future sold off late. And I don't think with the kerfuffle going on now again in the Strait of Hormuz and the Middle East, people just don't want to they weren't buying with two hands at the close. So we'll see what happens next week. All right. That's it. We did it. Let me find my button to end the show. If I can find that, I will end the show. See you, everyone.